Whoa, the market is hotter than ever. If you're coming in with cash, if you're coming in with financing, leveraging a mortgage as a buyer, there's certain things that you have to know. But in this video, I want to discuss the different types of loan products and the different ways that they may help or hinder you as a buyer. Stick around. Hey everybody, Logan and I, Williamson here representing Williamson Professional Real Estate Sales. If you don't know, I am a full-time real estate agent up here in the Greater Reno, Sparks, Carson City, Lake Tahoe area. If you have any questions related to what it's like to work, eat, sleep, play, or live your life up here in the Greater Reno area, I want to talk to you. Now, if you can't tell, I'm a little under the weather. We've got a little bit of a throat issue going on here, but the show goes on. And for that reason, I wanted to make sure that I got this video out because I have so many people that are reaching out with questions about, hey, should we pre-qualify for a mortgage? What type of mortgage should we get? And I wanted to address that in this video. If you've not already done so, I would please encourage you to subscribe to this channel. Please hit that like button. It helps me reach way more people like you that are considering a potential move up to this particular area. And if you haven't already done so, click that little notification bell because it's going to notify you every time I come out with new content, which is usually every single week, if not multiple times per week. Now, we've got a lot to cover as usual, so let's dive right in. Different types of mortgages. Okay, first of all, let's discuss how to be the most competitive writing an offer, which is probably going to put you in an inevitable multiple offer situation depending upon the area that you're looking in. If you're looking over in areas that are luxury, like Montreux, like Arrow Creek, if you're looking up in gated areas in Collin Ranch, if you're looking in a few gated areas out in Spanish Springs, and a couple of the luxury neighborhoods, you may very well be in multiple offer situations, but it's also possible, like what I'm dealing with now with multiple escrows, is that we were literally the only offer on the table. Now, if you come down, if you basically peel down the price range and you look at anything under roughly 1.2 million, it's almost inevitable that you will be in a multiple offer situation. So let's discuss that. The way to be most competitive is writing a cash offer non-contingent on the sale of another home in another market. However, and this is based on palatability for you. If at all possible, I encourage everyone to leverage a mortgage, to leverage financing, because it is financially the most diligent thing that you can do on paper. However, there are a lot of people that for many different reasons love to pay cash just because they love to own things free and clear. They also want to be as competitive as they possibly can be on the front end, meaning that if they can write a cash offer up front to get under escrow, you can always go in and finance the property after you own it and after you have basically recorded with your name on title. So all that being said, now let's move away from cash. Let's move into a mortgage situation. Different type of mortgage products, right? There are VA loans for our veterans. There are FHA loans for our first-time home buyers. There are conventional loans. There are fixed rate mortgages. There are variable rate mortgages. There are 30-year mortgages. There are 15-year accelerated mortgages. There are a lot of different things that you can do, but I want you to understand that working with a diligent first-in-class, world-class professional lender is going to present to you all of the different loan products that you have available to you to allow you to make the most educated decision for yourself, for your family, and to put together a true financial plan. Now, typically for a first-time home buyer, an FHA loan, okay, this is going to be a government-backed loan requiring 3.5% down. Usually it's going to help out a first-time buyer that may have a little bit lower credit score. A conventional loan, if you're coming in looking to put 3% down, 5% down, anything under typically 20% down, you're going to have to pay mortgage insurance, which is going to be an additional expense. So these are all things that your mortgage professional is going to have to go through with you to build that holistic financial plan. But what I want to let you know, because I'm having so many people reach out, is that a VA loan with zero money down, an FHA loan, which has certain requirements for the actual home, as far as any sort of a breach and firewall isn't eligible, a lot of different little nitpicky things about which homes are eligible and in which areas and whatnot. There are certain reasons why certain mortgages make you the most competitive. Now, if you can get into a conventional loan, whether it be 15 or 30 year, I always recommend a 30-year mortgage. And again, having the finance conversation about nuts and bolts, dollars and cents is something that we can do over the phone. I don't want to do that over video because everybody's situation is so different, and this is literally a prescription based on your particular financial situation and what makes the most sense. However, that being said, if you're going to bring a mortgage into an offer situation, if you're going to have financing, you're going to typically want a conventional mortgage. And an FHA is fine, but you're typically going to want a conventional loan product. A VA product is not really going to be competitive in this type of a market with zero money down. I hate to tell you, but it's just true. And I love our veterans and I love to work with our veterans, and I will fight tooth and nail if you want to leverage a VA loan, but it's really tough in these type of markets to actually get something accepted in terms of an offer when you have cash, when you have conventional loans, when you have other competition on the table that the seller knows based on their coaching from their listing agent that you're not putting any money down. Now, while it's a beautiful loan product for our people that have served, it's really, really tough to be competitive with that loan product in this marketplace. Now, a conventional loan with the highest amount down that you can possibly put down, the lowest loan to value ratio, is gonna make you the most competitive. And if you could do something like waiving an appraisal contingency, meaning we're gonna look at comparable sales, we're gonna look at comparable price per square foot based on the recent activity in the area, we are going to look at the comparables as if we were an appraiser. We are going to basically determine what we think the house would appraise for with a non-biased third-party opinion based on us putting ourselves in the shoes of being an appraiser, and we're gonna figure out, hey, what offer price is gonna make you competitive? And that comes from me working with the listing agent, trying to get as much intel as I possibly can for us to write a tactical strategic offer. And if you choose to waive your appraisal contingency, that means that any gap between where we think the house is going to appraise, fair market value, and what you've offered, your offer price, you would have to cover that gap in cash. Now, waiving the appraisal contingency essentially makes you the equivalent of a cash offer, because as soon as that loan can fund, as soon as we get the clear to close from a diligent lender that is talking with the underwriter, and if you don't know what that means, comment below, send me a DM, I'd be happy to discuss that with you in detail. But you're right up there with any cash offers that are on the table. What we're seeing in a market that is quote unquote appreciating at the rate that we are, almost 5% over the course of the past month, we're not having a lot of problems with houses appraising regardless of what offer price. Now, at some point in time, this will cool off, yes, but as of right now, a conventional mortgage, waiving an appraisal contingency is going to make you the most competitive, knowing that we may be up against multiple cash offers well above ask price. Now, if you have any questions related to the buying or selling experience up here in the Greater Reno area, like I mentioned, I'm a full-time real estate agent. I would love the opportunity to speak with you. I apologize for the voice. My name is Logan Williamson. If you haven't already done so, like, subscribe, comment below, let me know what content you want to see next, and I will talk to you here soon. If you would like to talk to me directly, you can go to talktologan.com, talktologan.com, get on my calendar directly. I can't wait to speak with you. Thanks.